confusion made me to present this particular presentation. I thought Venu will be presenting the topic till morning. Then I realized that no, I have to present the topic. Anyhow, all the present, I mean, the PowerPoint was prepared by Venu. I have just made some small changes to the presentation. Uh, the topic is about the discussion on the Delhi High Court decision, which was rendered recently in the context of validity of the provisions relating to anti-profiteering. In fact, though it talks about so many aspects, I think the focus which I am going to be taking on is only essentially relating to a real estate sector, where there is a specific comments and also some of the observations which have been made by the High Court. Along with that, I will also discuss on what all the issues which were raised and how the High Court has gone through the same. I think many of us already are aware that this section 171 is a provision which was uh, introduced into the GST law. Unlike the VAT or when the VAT was introduced, there was no such provision. But when the GST was introduced, they added this provision specifically based on various reports which were issued, which are taken to see the impact of the introduction of GST on the market or the general public. So this section 171 essentially has got two aspects to cover. One, now principally it is covering that whatever the benefits a particular businessman, either a manufacturer or a trader, is going to get due to the introduction of the GST has to be passed on to the customers. So there were two different aspects. One was the output tax rate reduction. The other was the input tax benefit, which a businessman got due to introduction of GST. The output tax, it's very easy and simpler to determine, where there is a one particular rate which got reduced to another rate. So whatever the reduction in the rate of output tax, that whether it is passed on to the customer. Here, generally, when we were, in fact, I had an occasion to interact with a couple of anti-profiteering cases with all these authorities. During that point in time, what I felt was the authorities are not having a differentiation between MRP based pricing policy vis-a-vis price plus taxes. So generally, my reading of this provision, what I felt was that this provision is meant essentially or majorly for the transaction where the customers are sold with a fixed price. The price is already fixed. So they do not have a breakup of the taxes as to what is the tax being charged. So in such a scenario, the price being charged to customers, essentially B2C transactions. So there should be transparency and the benefit of the output tax has to be passed on. When it comes to the benefit of input tax, which is said to be passed on, I think that is where the real problem arises, because there is no proper mechanism which is set out in the law, or it is not easy for anybody to so easily determine, because it consists of various factors, not only the taxes, which determine the pricing. So many cases, when we were trying to explain various factors, the authorities were not accepting it, or were not even looking into that. They had one straitjacket formula, essentially in real estate sector. They were only going with certain methodology, which I'll discuss later, and trying to adapt that particular methodology, irrespective of the facts of a given case. So I think it was becoming very illogical in many circumstances, many cases, that the what they used to arrive as a whatever the profiteering or the benefit which is said to have been accrued to the developers was actually sometimes it used to be much lesser compared to actual profiteering, or sometimes it is much higher than what they have not even profited. So I think there was a lot of anomaly in the way they were operating, and all these cases were challenged before the High Court, as well as some of them went to Supreme Court, to my understanding. Then all the matters were posted or transferred to Delhi High Court for a decision. So consequently, the Delhi High Court was seized of the matter, and in fact, they uh, framed lot of questions to be addressed on this matter. So when in the context of this particular 171, this particular matter was posted for the hearing. They said what all was basically brought to the before the court was whether Section 171 is constitutionally valid. And similarly, rules 122, 124, 126, 127, 129, 130, 134 is also whether constitutionally valid. This was the challenge which was made, and various penalties imposed in the orders, whether it was correct, and some notices which were issued, whether it's valid. So, and various other questions were raised. But in the present order, which has been passed, the mention was made by various advocates stating that let's not get into each case on merits or the issues. We have to first decide the constitutional validity of the which have been challenged. Once that is decided and addressed, we will go into the case to case basis and discuss on case to case basis. So, and on that context, this decision only deals with the constitutional validity of the provisions. At the same time, as a passing remark, they have given some findings relating to real estate sector. And for your information, already an appeal has been preferred. Sorry, the matter is taken in special petition before the Supreme Court. Uh, Yesterday, I was given to understand that notice is issued to the government department by a three-member bench. So effectively, this is not a end of the story. It is still beginning, so that the matter will again go to Supreme Court and all those things. Okay. So what was the arguments which was made by the petitioners? Firstly, they said this section 171(1) is unconstitutional as they are beyond the legislative competence of the parliament. Basically, what they were trying to say was uh, the constitutional powers was given to legislate on the aspect of imposition of tax, and and it does not have an authority to actually bring out any provision to uh, collect something which, or forcing somebody to pay something which is not which is not empowered by the constitution. So that was what was the main challenge they said. So there also they said it is in the nature of tax, whatever it is a compulsory extraction, you are forcing us to pay. So once you are forcing us to pay, it is nothing but a tax. And to impose a tax, there should be an authority in the constitution. And as far as that aspect, the constitution is not empowering them to levy a tax through this manner indirectly, was a line of argument which was uh, placed. And it is not within the scope of Article 246A was the argument which was placed. And further, most importantly, what was challenged was the manner in which these provisions are designed, especially the rules, are giving a excessive delegation to the authority, where he is he is asked to determine the manner in which the profiteering is there to be ascertained, and also decide the case on that. And there is also no appellate mechanism which has been built in this, and it becomes full and final decision, which has a lot of fallacy in this entire mechanism, and the process is what was the points which were raised. And one other points which were raised was this: first of all, the National Anti-Profiteering Authority was given a delegated powers, and they in turn giving a further delegation to DG, Director General of Anti-Profiteering. So there again they're subdelegating those powers to determine. So it is incorrect, and it is excessive. And subdelegation is not permissible. So this was another argument which was taken up before the court. And also they said the while determining that particular profiteering, they did not give any guidelines. They left to the whatever they authority, that is DGAP, feels, and the manner in which they will determine will be decided by them. So there's no proper guidelines given. So hence again that is not proper. The said the law, the section 171 uses three words: commensurate, profiteering, and commensurate reduction in the prices, which are not defined. So that gives a lot of arbitrariness for the authority while taking up these matters. Okay. So when it comes to real estate, they emphasize what was given by many of the advocates was the formula what was being used by NAA through DGAP was that the ratio of input tax pre-GST, ratio of input tax post-GST, and the differentiation, if any, is the profiteering, is what was the methodology which was being adopted. So it was question that that methodology is incorrect, improper, and it doesn't give any fruitful result, and it doesn't give the actual profiteering, and hence it is arbitrary, was the main argument which was placed. Okay. Now I will come to the main core issue of this profiteering in the real estate sector. In fact, I want to uh, share a couple of my experiences. And also, I would like to ask Venu. Venu was also one of the party asking for the anti-profit. Filed a case in the as a recipient of flat before the authority, and I think he got a favorable decision saying that there is a there is a profiteering by the company, and they should compensate. Okay. So they took an example also in the presented with the flow, with the diagram before the court. I'll explain how it used to work. Uh, Firstly, what they used to do is they used to ask, somebody will file a complaint. Based on the complaint, there will be a preliminary screening committee, and they will refer the matter to the DGAP. DGAP will carry out the investigation and issue a report based on the information documents which were submitted, and based on that they issue report to NAA. NAA in turn will give a hearing to the parties. Parties will argue and will present the case, and based on the submissions and the questions there is, they used to pass orders. So most of the cases were all uh, against the uh, business, against the respondents, and it was held in favor of the complaints. So in the real estate sector, they are giving an example how the methodology adopted was incorrect. Say in a case of two developers, they took an example where there are two developers, A and B, two identical projects, same place, everything remains the same, but somebody who is receiving more advance during the pre-GST period and somebody receiving advance after post-GST period. So what the methodology which they were adopting was, as I was explaining, what is the total input tax credit under the pre-GST regime which was taken, and the advances or the consideration which was received, which was assessed to tax under service tax VAT. So they were taking that value. So they were dividing the credit with that particular, the advances received or assessed for taxes. And they used to say this was the proportion of the input tax credit in the pre-GST regime. Say, for example, in the example which is given, the two cases, one was Vatica Limited case, and there's a differentiation. They give an example. In the flowchart, if you see, turnover in the pre-GST in a case where 60% was received in a project A, 20% in by the project B, whereas credit is same for both the things. In the GST regime, the turnover, what was turnover was that balance 40 and 80. So credit in GST regime was 10. So the ratio, though the credit in pre-GST is same for both the cases, based on the amounts received in the pre-GST, post-GST, the credit ratio got varied, due to which in the first case they said there is a profit sharing. In the second case they said there is no profit sharing. Actually, this is not so. When the credits are same, construction is same, how can there be in one case there is a more profit, when there's a more profit sharing, in other case there's no profit sharing? And in this particular scenario, they said there is no proper methodology which has been adopted, and they said it is to be determined on case-to-case basis. What are all the elements which they said presently being adopted is incorrect or improper is? No, okay, this is, we'll come to this later, sorry. Okay, this was basically one of the main arguments which was placed was to establish that the authorities was not following the right methodology, and they did not had a guidelines which was given by the NAA to determine what was the correct, what are the principles they need to adopt, how they need to arrive at the profit sharing. So it was at the discretion of DGAP, and it was not controlled. So those were the line of arguments which was taken by the advocates. Further, other points which were taken by the advocates was in the pricing policy, there will be various other factors. One of the factors is the market conditions, which there is no scope for providing an adjustment for the same. Second, also there will be a rise in the input costs or in the customs duty, imports, etc., which has to be given effect to, and none of those are being considered while determining the anti-profiteering, if any. So, and also they said there is no time period up to which this pricing has to be maintained. Say, for example, I was manufacturing X product. So I know that there was the cost of the product, including some of the taxes which I was not eligible to take credit, was say 100 rupees. Now, post facto during the GST period, that basic cost got reduced to say 98 rupees. So 2 rupees, there's a reduction because some of the input tax credit which I was not eligible I am now eligible in the GST regime. Now I have to reduce the price of my product from basic price from 100 to 98. No doubt. But up to which period of time I need to continue this particular 98 rupees? Is it 1 month, 6 months, 5 years, or eternally forever? So that has not been mentioned. So therefore, again, it is not clear. Vague was the one more line of argument which was taken as to this period for which it has to be fixed. One more line of argument which was taken by the uh, advocates was that it is not necessary that I have to give this amount only in through a price reduction. It can be given in other modes, like instead of and earlier I was in the same example which I told, the product which I was giving was say 98 gram for easy understanding purpose. I mean, now I've increasing whatever the 2% instead of the price giving, I increase the weightage of that products to 10% extra in my whatever the or 2% extra in my quantity itself, or I'll announce some other discount schemes and pass on that. So whether is it not sufficient that if I give it the same benefit in some other manner, not through a price reduction, and insisting upon uh, the benefit to be passed on only through price reduction is not correct or not proper. So this was one more argument which was taken before the court. Uh, and the one more argument which was taken was in FMCG products, the reduction will be very, very minimal, sometimes in paise, etc. So it may not be able to identify and pass on to the buyers. And also, I need to do under the Legal Metrology Act, I cannot I have to round off to the nearest paise and all those things. So effectively, though presently I'm charging 100 rupees, the whatever the increase which I have to give may come to whatever 5 paisa, 10 paisa, 15 paisa. And if I round it off, it will come back to again 100. So effectively, I cannot pass on the benefit. Was the one more argument which was placed. Uh, Arguments of a revenue, essentially, what did the revenue say? They only, I am not going in detail into that. They countered all the arguments placed by the advocates by quoting certain case laws. And what I felt was mainly the trust was given to the decision of Supreme Court is in VKC footwear, where they upheld the provisions of that inverted duty structure by putting the legislative powers, etc. So they argued essentially on that basis, and in addition to that, uh, there was one amicus curiae, Mr. Amar Dave, who was asked to help. So I understand that he has given his line of arguments, and on reading of the arguments given by amicus curiae, what I felt was it was completely more or less similar to the arguments which were given by the advocates on the uh, revenue side. Further, one important aspect which uh, he also brought out was referring to various reports which were taken as to the impact which happened during the VAT introduction regime, whether the benefit, the pricing was increased, whether the benefit was passed on, whether stakeholder really did pass on to the customers. So, in order to ensure that the same mistakes doesn't happen, So the law, while drafting the GST law, they have considered all these aspects and have added this particular provision into GST law, and that has to be given a purposive interpretation, and it is more a beneficial piece of legislation. Sorry, the consumer protection related provision. So it has to be given a wide perspective, and it has to be interpreted like in that manner. When further, when it was interpreting about the scope of this section 171, read with Article 246A, they clearly understood the law which is to be framed is relating to GST. When it is using the word relating to GST, it is not only the matter pertaining to the levy and collection of taxes, it also can cover anything incidental or ancillary relating to that can also be incorporated. The legislature has got such powers, is what was uh, brought out in the department side arguments, and court more or less accepted all the arguments placed by the revenue or by the amicus curiae, and uh, actually did not appreciate any of the arguments which was placed by the advocates, uh, except on the real estate front. They have given some findings which I want to discuss and debate for the next portion. Uh, what the as to the preliminary general observations on the things which I noted down is, which also will be useful when we are generally discussing, is when any challenge on any of the provisions as to the constitutionality, it is said that firstly it will be understood that it is valid. The primary understanding is all the provisions made are valid. If somebody is challenging it, it's a responsibility, I mean, it's a burden on them to establish that it has actually violated the principles on which you can question the constitutionality. So, in fact, in the decision referring to one of the books, the shorter constitutional, uh, 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 where they extract the para and say in four elements, the constitutionality can be questioned. One, fundamental right. Another is excessive legislation. And I think two more are there. So where they say in those aspects only, the constitutionality can be questioned. So further, they say when the law is relating to economic activities, it should be viewed in a greater latitude, and uh, it has to be given a freedom to play on its own to deal with complex problem. We cannot confine it and read it very narrowly. The power of legislature should be viewed wider to see that the purpose and the objective is achieved. Uh, and further, when it comes to the, they give a clear one things is big, taking from VKC's decision, where it says, while we are alive to the anomalies of the formula, an anomaly per se cannot result in the invalidation of fiscal rule, which has been framed in excess of power of a delegate legislation. I will have to say that if the court appreciates that every formula the legislature cannot come out and give out a formula. Based on the delegated legislation, the ultimate objective has to be achieved. It cannot be said that the formula is not fully covering all the aspects. Based on that, the law cannot be held to be invalid. So basically, that is what the principle. And if going, in fact, they discuss about, generally we quote Srinivas Shetty's case, where we say when the methodology is not prescribed, the levy fails. The computation fails, the levy fails. That is a generally we quote in many of the our submissions. So there, that also was quoted before the court. So the court distinguishes that by saying that was a case of a levy of a taxes. Here is a case, it is not a levy of taxes. It is something to do with the consumer protection related law, and that principle is not applicable, and we cannot expect law to come out with straight jacket formula for all the scenarios. It has to be given to the delegate legislation to determine the methodology in which it has to work. One more observation which I found in this decision was uh, the GST law is now not only the law relating to taxation, it is actually change the manner in the business do happens. So we have to consider that is also an aspect. In fact, we are seeing that it is not only guiding merely a taxation aspect, even the way the business operates, the way the business functions, it is the way it is affecting the entire industry of certain goods and services is showing that GST is not only a taxation law, it also impacts various other aspects of a business as well. Which I told the 170 is in the public interest consumer welfare objective, so it should be given it's coming to the real estate related aspects. One of the findings in the order was this. With the introduction of a GST, the availability of an input tax credit against various goods and services used in construction has increased, or input tax credit was available against more goods and services than before. This resulted in decrease in the cost of the builders, as they now had more input tax credit available to be set off against goods and service tax paid by them in the GST regime, as compared to before the same was not required to be collected from the system. See, why I extracted this was the understanding of the code when they is that in all the cases of the builders, there is definitely going to be a savings, and that has to be passed on to the consumer. So in other words, there were so many input tax credit which was restricted, especially somebody was in a composition scheme, so they were not taking ITC, or the input tax credit on the excise duty paid on the materials was not available. Similarly, the CST paid on the materials purchased from outside the state, the input tax credit was not eligible. So all these were there, but with the introduction of GST, all these benefits are accruing to the builder. So that means the initial cost, which would have been quoted or negotiated or agreed or contracted, that price included all these taxes as one of the elements in their costing. Hence, with the introduction of a GST, since they're getting the credit, this is an additional benefit which is going to decrease their basic price, thereby that whatever the benefit they are going to get has to be passed on. My point on this is, if we take this, then in all the cases of the builders, there will definitely be a savings. And at that point in time, does it mean that all the builders should be compulsorily subjected to provisions of Section 171, irrespective of the complaints being made? Because it is either suo motu or on being complaint being raised, the authority is given a power. So that being a case, does it mean that these proceedings can be initiated against each and every builder? If so, why was there not a specific provision in rules saying that all the builders should specifically pass on the benefit. So at this point in time, I would like to stop and ask the members any points on this so that we can debate on that and we can take the discussion forward.
Sir, I have 2 points here, sir.
Yes, Venu.
One, since in the absence of specific computation methods, it is only a generic statement that the credit has to be passed on. So, which is more like a self-assessment, and the builder can establish saying that, okay, I have done my computation and in my view, there is nothing to be passed on. So I have not passed on. He is a self-assessment which he has done. Only the cases which has gone to NAA, where they have established and they have done, will still be hold good. Is a thought of mine.
Okay.
Because they haven't specified that, okay, builders compute in this way and pay it.
Okay.
And the second point is now, given that the NA computation itself is flaw, I'm not sure if someone has passed on at some value, that itself is now wrong. So someone would have, NA has ordered someone to pay high, someone has to pay less. So in that scenario, I'm not sure what would be the fate next. So whatever I have done is right, could be a justification in my view.
Yeah, in some part of the arguments in the decision also it is mentioned where the court's finding this is merely a presumption, but rebuttable presumption. So if somebody is able to establish that I have not effectively passed on, then he is relieved of this burden. So the primary understanding, what I'm just trying to say is, here is a court's understanding that in a builder's case, in all the cases, and further also there are some specific situations I've explained, which we will go through that. So assume now your point was that there is the formula was flawed and there is no proper formula. Now, given those two issues are resolved, does that mean that all the builders for the past can be taken into a task by virtue of this finding? Others, any comment?
I have a point with regard to if, for example, when we go for residential apartments, there is going to be a composition scheme. So earlier also the transaction was under composition scheme under VAT also, and service tax, there was a overall tax payable was there. So when we take this particular scenario, so can we look at taking this aspect where we are telling that there is no tax saving as such? There is no unjust enrichment. When we compare two particular methodologies, can we take that methodology and tell that there is still no tax because there was no input tax credit itself per se in both the scenarios?
No, you are telling after 19?
Yeah, after 19, yeah.
But these questions may come in the initial period of between 17, 18, 18, 19, the projects.
But the projects have been continuing, so it will always have, so there would have been a change in the methodology. From 17, 18, 18, 19, we would have adopted one methodology. And from 1419, there was the option, so we have opted for the 5% category. So in that particular scenario, there will, there is going to be a change in what I want to tell is up to service tax, up to the GST regime, there was one methodology of taxation. In GST regime from 1717 to 31st March 2019, one methodology. From 1/4/2019, another methodology is being used.
Got it. No, I want to emphasize a couple of points on a factual basis, which many of us also are aware. Firstly, the pricing with the customers sometimes will be exclusive of taxes. They say taxes, applicable taxes charged extra. Some places it will be silent. Some places inclusive of taxes. So, again, the payments are made over a period of time. Sometimes they agree and renegotiate on the pricing, and there will be again a delay, due to which there will be a reduction in the price, renegotiated price. So there are various uh, factors which change the pricing, which was agreed and later being paid. One second also, there cannot be a standard thing. If I am actually having a pricing, I did not have any tax clause. The customer is not going to pay me a tax. Earlier, no doubt the basic price got reduced, but with the increase, 4% got increased to GST. If I am charging that whatever 18% or 12% on the total, whether that has actually commensurate. Because again, the question which comes up is whether I need to see two things separately. In other words, my output tax, there is a increase. Vis-a-vis my input tax, there is a corresponding reduction in the cost. So, where there's a provision for reduction, passing on the benefit of reduction of the output tax, okay, and passing on the benefit accrued on the input tax. Is it possible for me to adjust the corresponding input tax savings with the corresponding output tax increase? So whether that adjustment is permissible is one more question which comes up in this issue. I think that has not, in my reading, did not come out anywhere as to the cross adjustment, whether it's permissible or not. Okay. So I think any other comments or points?
Sir, also, there was sunset clause for NAA, 2 years for taking up the matter.
Correct. Extended.
Now,
extended.
Which is extended. So, so considering that, now there cannot be any new or the orders that can come up. Correct, sir?
So I think now they've transferred to that, what is that?
Competition Commission.
Yeah, Competitive Commission, the authority, and they are supposed to decide. But your question whether I can put a fresh case, I think I have to check that provision. I have not seen, because sometime back when I examined, that last date was there. After that, I don't know whether they extended or not extended. Because once the case all went to High Court, we lost interest in those cases. Waiting next, let that come.
So that means NAA cannot pass any new orders, correct, sir?
NA's powers have been taken away now.
Yeah, so they cannot pass any new orders.
No, it is now transferred to the Competitive Commission.
Okay, got it.
Jatin sir, anything on that last date for application, Jatin sir?
No, sir, nothing. Because see, what we have seen is after CCI took over, they are entertaining applications with reservation that limitation to be examined.
Okay.
Atara.
Sorry, sir. What's the last part? What you said? I missed out.
Limitation to be examined separately, but complaints are not being rejected because B2C alva.
Okay.
So they're accepting complaints, but examining these things.
Okay, right. So further, what the court observed on the methodology which was being adopted by the NAA and DGAP for the real estate sector, they said it was based on the ratio of input tax credit to the turnover in a pre-GST imposition, and difference was being asked to be paid. And many cases we have seen that while giving information, they were giving more stress on these points, but so many other factors were put out was not considered. There, the court said there is no direct correlation between the turnover and the input tax surveyed. It is more to do with the cost incurred. So hence the methodology adopted by NAA as well as DGAP is incorrect. So it cannot be expenses in the project is not uniform, and also the credit need not be uniform throughout the project. Say for example, one of the project essentially during the foundation etc. The percentage wise the structures and all are complete, but the cost wise the expenditure which will get more ITC maybe towards the end. So in some of the projects where they don't do a finishing, they only give a structure, then the majority cost might have been at the foundation, ground level, where they need to, if there's any, soil is not strong. So the cost might have been gone there, expenditure might have been gone there. So there's nothing like a uniformity or can be assumed or presumed is what was the observation of the board. Further, it says the eligibility depends on the nature of construction during the particular period. Again, there's no uniformity, which I told already. And also, one more aspect which they said is that when the saving is made, there is a, assume in a project, there is a savings of say 10 crores. They were distributing based on the percentage of the amounts. They said, no, it should not be based on the consideration. It should be based on the area being purchased, not based on the amounts paid. So that was one more observation they made, because two flat buyers taking a flat should be given an equal benefit, irrespective of the pricings they would have agreed for. So that is one more observation it is made. Okay. I am coming to the scenarios which are examined by the court. The court said there is no dispute. In fact, the wording said there is no dispute as to the following scenarios and to be passed on. So they discussed about 4 scenarios, which I'm going to take one by one. They said it's a construction has happened pre-GST. So where it says the flat was completely constructed during the pre-GST period, and the payment of for the price is made pre-GST, no benefit of input tax credit would be required to be passed on. But at the same time, it is not covering straightly the scenario where the construction happened pre-GST, but somebody is coming and booking the flat later during the post-GST, or somebody who has booked the flat pre-GST made only a part payment pre-GST, but they're making a part payment post-GST. In that scenario, what happens is not specifically addressed, because as you can see the observations made earlier, they said the benefit to be passed on is not basically with respect to the money being received, it is based on the cost and expenditure incurred. So if some construction has happened pre-GST, so there's no question of any benefit being raised, because no further cost will be incurred in the GST period. Hence, there is no requirement of passing on any benefit to the whoever is a buyer. At the same time, when we were seeing at the price will include the cost of taxes with input tax credit was not available. When I was reading this, the presumption of the court was in the pre-GST regime, the input tax credit was not available at all. But at the same time, when I've seen the types of the duties and taxes, central excise duty and entry tax. But in fact, the service tax credit was available. While we were doing a computation for the NAE, they were asking even the service tax also as one of the element. But when the service tax credit was available before GST also, that should not have been taken, is what was the content we were taking. But now they are not so we need to consider, in other words, only the taxes which was not eligible to be taken as a credit pre-GST, and to that extent, what is the benefit which is being accrued in the post-GST only to be seen. So here construction pre-GST, no benefit to be passed on is a first proposition which they are clearly saying. The next thing what they're saying is, if the construction of the flat had started pre-GST, continued or completed post-GST period, they're saying buyer making a full payment upfront post-GST period. So somebody, here is a situation where I had not even entered into a contract with the buyer, with the developer. I am entering into a contract only after introduction of GST, but the flat is being partly constructed pre-GST, partly post-GST. They say in this scenario, whatever the benefit which is you are getting through the expense incurred post-GST, to that extent it has to be passed on. I would like to read the fourth bullet point because I want to compare this with the next bullet point, which is next scenario which is going to come. Is entitled the benefit of input tax credit on the material which has been purchased in respect of this flat during the post-GST period, and on which benefit of input tax credit has been availed by the builder. So where there are certain goods which are purchased pre-GST and post-GST, where whatever the input tax credit on that, if it is availed by the builder, then the same has to be passed on. If you see a scenario where if you are not at all taking a benefit of input tax credit, as Shekhar was mentioning, post 19, I am not entitled to take credit, then there's no question of that being considered as a benefit. Okay. So there it is on the purchaser specifically mentioned, whatever the purchase post GST reasonable, they say it has to be passed on. Now they talk about a third scenario where the flat is booked pre-GST, payment also is paid pre-GST. In that scenario, the benefit which they say is little differently worded in the order. I know I should not interpret the decision of a court, but still they are make a little differentiation over here, where they are saying on the taxes paid on the construction purchased by the builder in the post-GST period, during which he has been given a benefit of input tax credit on the taxes on which the input tax was not available pre-GST. So basically, here wherever the builder has been getting the benefit on his purchases, wherever that is the cost reduction due to the introduction of GST, which he is getting a benefit, should also be passed on, is what is coming out here in my reading. Any different understanding on this, I would ask the members, because there are two different things. One, anyhow, the aspect of whatever I purchase, I get the credit which I was not eligible, is a one thing which is clear. But what benefit which I got from my suppliers, if any, that also has to be passed on, is forthcoming in this third scenario, but that is not being so categorically told in second scenario. So any comments or any points on that? I'll tell also example. The steel price which I was getting from a manufacturer earlier, the basic price was say 10,000 rupees. But after introduction of GST, the basic price which I got from him was 9,500. So he reduced the price from 10,000 to 9,500 because it earlier, whatever the cost of excise, etc. was there, that benefit he has passed on. That 500 rupees is a one thing. Second, whatever the tax I paid on the steel, I was ineligible. Now with the introduction of GST, I am eligible. So the benefit of tax paid, the VAT on that particular steel is to be passed on, is told in the second scenario. But the third scenario, in my understanding, is talking about that 500 rupees, whereas second scenario is talking about a VAT on the whatever that 9,500. So any comments or any is my understanding okay? Is something else is being mentioned here? Whether both has to be applied or one in each of the scenarios?
Sir, I think both needs to apply because they have initially made a comment. The price adjustments is also not taken into account. Now, conversely, if this logic extends, if the steel price hasn't gone to 9,500, it has gone to 10,500, and my VAT credit, let's say 500. Effectively, a builder can also say that there is no benefit under GST.
Got it. No, basically you are saying that I told 9,500, but if we effectively see the excise duty benefit, it should have been much more. There's also an increase due to market conditions or raw material cost conditions. It has got increased. So how to determine will be a challenge, which is not easy and difficult and practically not possible to establish and substantiate. And again, in the cases, last slide, which I want to talk on this aspect, little more detail. Okay. So anyhow, I wanted to bring out these two aspects of not only merely the taxes paid on my purchases, also effective value of my purchases getting reduced. If so, is also covered. If so, how it is to be determined, whether other conditions like market condition, cost of raw material increase, all those things, how it has to be eliminated. So there's no clarity on those aspects, which will come into a question and will be a matter of debate and arguments at different stages. Last point which they are saying also would be relevant because it says the flat is constructed in the post GST period and is purchased after construction being complete by making upfront payment of full price. They said no benefit of input tax would be available as the price of the flat would have been fixed after taking into account the input tax credit, which has become available to the builder in the post GST period and which was not available to him in the previous GST. So basically, the last proposition is saying if you negotiate a new price after GST, so any flats which are booked post GST, then going by this, there should not be any anti-profiteering clause applicable because you have already considered the effect of the GST and you are reduce the prices in your pricing negotiation itself is what is coming out. But there are practically so many cases where they ask the brochure when they were doing this inquiry or the information being collected, what was the price before GST, what was the price after GST, and if you have kept the same price or increased the price. So they said, no, we do not agree this principle that you have already considered, because if you had considered, the pricing should have come down from whatever rupees to lesser. So actually you have increased it. So or you have kept the same. That hence we do not accept this proposition is what was being told. So with this, whether that will still hold good or will it be accepted is what something which we have to wait and see. Okay. I'm coming to the last part of my discussion. What was told is that there's no one size that fits all formula or method that can prescribe in the present batch of matter. So they said NA has to determine the appropriate methodology on case-to-case basis, keeping in view the peculiar facts and circumstances of each case. So it is no more going to be one fixed formula. You can always put across, you are saying that, no, my situation is different. So then it becomes, in each of the case, a negotiation factor. Various authorities, in fact, during the anti-profiteering regime itself, the authority, no, the DGAP people used to call the developers and say, okay, we will help you out in reducing the formula, methodology, and all those things. So I think with this option being given, that in my view may become rampant. Okay. There are many other scenarios of permutation combination of what we discussed can be there in the real estate, which has not been addressed. And again, we need to keep in mind the MRP based pricing plus price plus taxes basis. So if it is price negotiated plus taxes, then whether this anti-profiteering provision is applicable or not applicable, if it's applicable, to what extent applicable is what is. And yesterday, already this matter is appealed, not appealed, the taken to Supreme Court through a special. And I think Supreme Court has already asked to issue a notice to the other party, the government, and again the litigation is going to continue on that. Further, this is only a constitutional validity, but each of the cases is still not decided. So each of the matters again has to be taken still by the court, and it will be argued, and based on each cases, they may give a different findings or onto facts to facts basis, which also we have to still wait and see which one would be applicable, which will not be applicable. If the Supreme Court stays the order, then all those matters also is going to be kept in abeyance. And not only in Delhi High Court, various other high courts also have got various matters where they said, since the matter is pending before Delhi High Court for a decision, so we'll keep all these other matters also pending. They've given a stay, they've asked somebody to pay 50% of the amount. Some cases they've said 100% of the amount to be deposited. So various decisions are there across the country by different high courts. So we have to see what stand they're going to take after the decision of this High Court of Delhi. So now I think any questions or any points which we can discuss or the comments we can discuss on.
Sir, a couple of points. Is again going back on that sunset clause of NAA. If the court is now saying that, okay, go back and recompute, and project closed, or whatever the earlier computation I have ordered 100 rupees, new computation could be 80 rupees or 200 rupees. Should the builder has to agree and go by it, or what will be the fate of those things?
No, if their order comes up, there's no appeal mechanism. So remedy available is only a writ remedy. As to the procedure being followed is incorrect. If the constitutionality of the this is upheld by Supreme Court, then I think only question will be the methodology or a process adopted is incorrect. Instead of taking this value, they have taken this value. Those can be your line of arguments. I think to say that I am not at all liable to pass on may be difficult.
Yeah, no, now the court has said the procedure is wrong. Can the court direct NAA to revise the computation, and that revision may go upward or downward?
True.
What would be the remedy for the SSE?
No, the whoever the person to whom the respondent to a complaint. Okay, so as far as they are concerned, the authority is said. I mean, with whatever has been said, there is no straitjacket formula. It has to be decided by authority in each case based on facts and circumstances. So now with that, they may remand the matter back to the authority for determination. When the authority does the revised computation, as you rightly pointed out, may say, yes, actually we have determined X, it should be X plus or X minus or 0. So either of the scenarios can arise. So based on that, either you have to comply with the same. If you are not in agreement with it, you have only option to go for a writ remedy because there is no appellate remedy.
So the limitation will not be applicable in those matters.
No, already a case is filed, the limitation is not applicable. What Jatin sir was mentioning, to my understanding, is that the fresh application somebody is filing today.
Okay. Okay, fine. Sir, completely deviating question. In this, there are a lot of people who matters were clubbed together.
Correct.
And when the citation is formed, how would they make the citation? In this case, Rekit Beckinser and others.
Whose name is on the top?
First person to approach.
Okay, the first person which went to Delhi High Court, and others have voluntarily merged their case with this, or it would have been called upon.
No. Actually, I think some of the matters are of Delhi High Court. Some are also of the other High Courts, if I am not wrong, based on the Supreme Court decision was taken up by High Court.
Because Sir Rekit Beckinser was writ petition 2019, but I see writ petitions of 2018 was also there, which are below that.
No, I think it is not the first to approach. Basically, in the listing of the case, whichever the case has been available on the top, and it has been argued. Jatin sir, correct me if I'm wrong, Jatin sir.
No, you're right, sir. You're right, sir.
File ಯಾವ್ದು ಮೇಲೆ ಇರುತ್ತೋ ಅದ್ರ ಹೆಸರು ಬರುತ್ತೆ ಅಷ್ಟೇ. In fact, many a times the advocates also ensure that their case comes on the top to have their case name coming.
Okay, got it. No questions from me, sir.
Any other points? Supplement to whatever the discussion which you made. Jatin sir, I wanted your comments on this, the way they look at the constitutional validity of a provision.
Sir, as regards NA itself is concerned, we just need to see a little bit of background to how this has happened. Industry faced a lot of adverse orders, like Patanjali lost the quantity increase in noodle packet, Nestle lost, ITC lost, all the soap shampoo companies got a very bad, had a very bad experience. Legal metrology department did not allow them to enhance alter the MRP until much later. So many of these instances resulted in a very difficult situation. So on whatever grounds writ petitions were could be shown as maintainable, parties carried the matter to High Court. If you actually see, all writ petitions are in Delhi because NA was based in Delhi. And there are a few who sort of manipulated the system. Instead of doing cost accounting, they went into legal aspects. Because if you look into costing, the formula that DGAP was following was totally wrong. Because the trading company and a works contractor, they said, is exactly the same formula to be used.
Correct.
So, even now, so the grounds on which they carried the matter to High Court was composition of the NA, excessive delegation. See, we have to understand whether the grounds for maintainability was the real grievance of the taxpayer.
No.
Or the grounds of maintainability was the simplest way to explain to a court to admit the matter.
Okay.
Now, all these matters will be taken up by CCI, and revenue side DGAP only is doing the investigation there also.
Ah.
So therefore, the grounds on which the writ petitions were held maintainable have now been addressed to say basically that constitution of NAA is not unconstitutional. To look at the formula, they have not very clearly struck down the rules to say that you cannot have such an arbitrary formula or a one size fits all formula. It should have actually the anti-profiteering rules should have been very comprehensive with elements of subjectivity like our customs valuation SVB provisions,
Correct.
cost accountants, chartered accountants, services taken to arrive at the profiteering amount, and accounting principles followed to show how it is passed on, because passing on, there was instances where the department said, if you credit the party ledger with the profiteering amount, that is not sufficient, you should give a check.
True.
The taxpayer said, look, I have credited the account, so whenever I receive the remaining installments, the installments debited to that account has already got reduced to this section. No, you're confusing us with debit and credit. This is not allowed. So therefore, they should have allowed experts to come in and issue certificates to say that, because this is very old, this is not something new. Unjust enrichment has been accepted based on CA certificates and cost accountant certificates for decades now. So there is nothing spectacular in anti-profiteering, but what has happened is this became highly corrupt. This is highly corrupt, and therefore those who had profited only got favorable orders because they sufficiently had a buffer to take care of all the greasing the joints to make sure that all the parts are functioning properly. It is the very few who suffered very bad orders, and now they are left without any choice but to swallow that burden and proceed. Now you see, there's going to be, these matters are now going to go back to CCI. Again, there is no rules because the grounds on which they took it to High Court was very limited. Now it will go to Supreme Court on those limited points and finally become 370 decision. Nothing really will come out of it. Without rules, I think taxpayers have got no justice in this. Without clear rules, they cannot, profiteering cannot be correctly calculated. And now once you let the case become so old, it of fade for all stakeholders to do anything about it. The biggest flaw I see in this is the grounds on which it was carried to High Court.
Yeah.
Those grounds were not the real grievances. Boy is not working in multinational.
That is not the real ground for rejection. Okay. I think the important point which Jatin sir did mention was that this the real reason vis-a-vis the reason for making the writ admitted, I think is a practice which generally followed in many cases merely to make the case admitted, because if you don't question you want to go in a writ means unless you show those elements, they will not admit the writ on a merits of the case. So that's the reason why they take it. In fact, all these practically also when they started ordering the 100% pre-deposit of the taxes, even the High Court started saying that you have to deposit 100% amounts which have been ordered to be passed on. The people started taking to writ in other courts. In fact, Karnataka, 2 of my cases was filed where we filed at the stage of before the order itself comes up. That is when the DGAP gave a report. That time only we challenged that they did not have an authority in the current High Court, so that we don't get into the aspect of deposit of that amount also. Otherwise, if the order is passed, then we need to make a deposit. So I think those were certain things which we need, which is general again as a whatever the aspects on which it is finally, I am also of the feeling that Supreme Court will uphold the validity, but methodology will be directed back. Again, as it was a practice, there's going to be a lot of corruption which will be involved, because once it says case-to-case basis and factor-to-factor basis, there will be a lot of issues which will come up where, and again, more importantly in this case, the opposite party will not be there to defend, counter, put across any additional defense. Nobody will be there. It will be only an interplay between the government authority and the party who is supposed to pay. So the impacted party will be not there in the picture. So it will lead to a lot of corruption. It will be a merely eye-washing exercise is my view. Okay. Right. Anybody else has anything to add, comment, question? Others go to it.
So another point, when the composition scheme introduced on from 1st April 2019, the similar challenge was there because of transition from credit to no credit. And even there is construction in different phases and advances received, various things were there. So the formula which they have given is little methodological and detailed formula that existed. Can the court go back and say apply the similar formula for the computation of anti-profit?
I think, in my view, court will not give any formula.
Okay. They will only give a direction.
Because again, you're talking about real estate. There may be other products. So once they say, then there's the comparison will start. So they may leave it to the authority to determine.
Got it.
And overall, I can conclude, as a concluding remark, I can say the purpose for which the writ petition was filed, more or less in effect, is achieved from all the petitioners. Either due to delay in case, either the customer who put up a case are no more, coming and asking about it. That is a closed chapter, and the future when they come, now they know how to handle the data to be given, what data to be given, and many cases there may be a situation with the this is more than the period we have already crossed 6 years. By now GST is over. Then if they are coming out with the new authority coming out and asking, give information of the purchases of the past, which might have not been given at that time, we may not have the data, or we may say we don't have a data. All those things can become an excuse, and it is they will be only going round and round about in the process, but finally may not yield anywhere or reach anywhere with this process. This is what my final view on that. Thank you. Thanks, everyone.
Thank you, sir. Any other comments, questions from anyone? Oh. Jatin sir, anything to add before we conclude? Okay, sir. That's thank you, Rajesh sir, and sorry for that confusion. And
no, nothing. It was probably I thought it that way.
okay, sir. Thank you, everyone, and see you in the next session. Bye. Good day.
Thank you.
Thank you. Bye. Thank you.